Hello, welcome back. In this video, I'm going over how you actually enter the QBID deduction, the 20% pass-through deduction for your taxes using FreeTaxUSA. And while doing this, we'll also take a look at an example on Form 8995 and an example on Form 8995-A. So I'll be explaining both of those forms and two examples going over if someone is below the threshold, so they qualify for the entire QBID, or they're above the threshold, and so they're going to be in the limitation for an SSTB. Now, if any of the words I'm saying sound confusing, be sure to check out my last video, which goes over all the basics about this 20% QBID deduction. The focus of this video is how you actually enter it into software, take the deduction, and to review your forms and make sure you understand that you have the correct amounts on your forms for the QBID. Let's jump in. If you're new here, my name's Amanda and you're watching The Business Finance Coach, where I simplify business to help you succeed because I believe that the world needs your business. Now let's jump into how to enter QBID using FreeTaxUSA on your personal tax form and Form 8995 and 8995A. So how do you enter the QBID deduction in your tax software, whether it's TurboTax or TaxAct or my favorite, FreeTaxUSA, which I'm going to show you in a moment? They're all going to be a little different, but they're essentially the same. After you enter your business net income or information about your business, whether it's a sole proprietor, self-employed, which is the example I'm going to show you, or if you have income from a flow-through entity like an S Corp or a partnership, you'll have a Schedule K1. Remember, single member LLC, you're also going to be just like the sole proprietor, self-employed. So in either case, when you enter these in the software, when you're asked about your business activity and you enter this, then at the end, you're going to have questions about QBID. So let's jump into FreeTaxUSA and I'll show you exactly what this will look like. So when you log in or log back into FreeTaxUSA, you're going to see Welcome Back and you're going to see the tabs along the top. I'm going to click Income and I'm going to go down to Business Income Schedule C. You can see below that is Partnership, Schedule K1, and S Corp, Schedule K1. And remember, those businesses, the partnership business for multi-member LLC or partnership, and an S Corp, they have to file a separate business tax return first, and they give the owner a Schedule K1, which you then enter on your personal return. And that's why being single member LLC, sole proprietor, self-employed contractor is the easier option, because the business doesn't have to file a separate business tax return. So I'm going to click on this because I've already gone through and answered all the questions. Most tax softwares, including FreeTaxUSA, you need to go through all the questions in order first, at least once. And then you can go back into different sections. So you can see here, I've already entered a business, and TurboTax, the other options, they all work the same way. Like we'll see a summary screen where we can add, edit, or delete Schedule C. So you can see I have one here. I could add another one and then there'd be another one listed. You just say yes to add another. Instead, we're going to click edit and go in and check out the one I made here. So now this is a summary screen of everything that's been entered for this particular business. So we can see the basic information, and then we can scroll down. This is the income section and expenses, and at the bottom here we have miscellaneous QBI. So this is where we're going to click edit to answer these questions. And you want to do QBI questions last, especially because they may also be when you're leaving the business section, because they technically apply to all of your business income. And so if you are trying to answer these questions before you've added your Schedule K1 from another business, you're not going to have all of the numbers yet. So you definitely want to try and answer the QBI questions last, or at least keep in mind that you need to come back to them at the end. So these first two questions, these just want to make sure that you weren't an employee in the past and you said to your employer, hey, let me be a business and you pay me as a business instead so that I can save 20% and get a 20% tax deduction. That's all these two questions are getting at, and they're actually pre-selected at yes, this is an actual trade or business. And no, I wasn't providing services to a former employer that are substantially the same as my business. So we'll leave those as they are, save and continue. And now we have our questions. So we've calculated that your qualified business income is currently $145,942. Now I'm going to show you how to check that in a moment. And you can see they say that our business income from my business, I named the business Amanda Russell's LLC. So my business net income minus expenses, has also been adjusted, reduced by self-employed tax deduction and self-employed health insurance deduction. So that's true. You know, what qualifies for QBI for this deduction is your net income from a flow-through business. And I talk about this in that first video, so be sure to watch that as well. However, we need to reduce that amount by any related deductions that you get on your personal main tax form. And so we'll look at that in a moment on Schedule 1 of the 1040, and where business owners can deduct health insurance, half of their self-employment taxes, as well as retirement plans. So it's only if those two qualify that they'd be relevant, obviously. Now we're asked, do you want to use the QBI we calculated above? If not, you can actually enter it yourself. So of course you'll see how to calculate it in this video, but I have checked and this is correct, and I'll show you that. And then they're asking us, after you finish entering all of your income, will your taxable income be more than $160,700? And of course, that's the threshold for a single person before we have a phase out if you're an SSTB. So if we say, yes, our income is above that, then they're going to ask us, are we a specified service trade or business? And remember, these little question marks and links, you can click them. They give you great information, but I covered all of this last time. So most small businesses are an SSTB. So I'll say yes. And then, of course, we need wages for QBI or unadjusted basis of assets for us to qualify after the phase out. And most business owners won't have this. So that's okay. We'll still qualify for the phase out. But in this first example we're doing, we have less than 160,000. So I'm going to say no here. And now I want to show you how we can check these numbers. So how do you know what your QBI is? And how do you know what your taxable income is before QBI? So I'm going to press save and continue. We're going to go out of this section. We're just going to keep continuing through the questions. And I want to just show you that there's going to be a few more questions about QBI. So here, when I continued out of the income section, you can see they're asking us about real estate investment trust dividends and publicly traded partnership losses. And they're asking about these things because those are the other types of real estate investments that qualify for this 20% deduction. This 20% deduction is for large real estate type businesses. So 0 in this case, and enter qualified business net loss carry forward. So if on a Schedule C or a Schedule K1, you had a net loss, then that actually offsets your net income to calculate your current year QBI. We'll leave those blank in this case. And now you can see we're onto an income summary. We could keep going here through the questions, but I'm going to skip over to summary. And this is a great tool because it's a summary of your tax return. Now we can also just look at the main tax return by coming down here and clicking view. So the first thing we needed to know is, well, what is our taxable income? You know, are we over that threshold? How do you check that amount? So looking at the 1040 for last year, it's a little bit different this year. There's a few more lines being added back in, which that's a topic I have a lot to say about, but I will leave that out of this video. But you can always just read these, especially the bolded words. You're going to see the information you need by reading over here to the left side of the boxes with the numbers in them, the labels, if you will. So we can see line 8B, this is your adjusted gross income, 145,942. Now, that is our subtotal, a main subtotal in the return. Then you can see this is our standard or itemized deduction. That's the single amount, $12,200. And then this is the qualified business income deduction. And then that brings us to taxable income. So we want taxable income before the QBI. So we can start with this adjusted gross income number, 145,942, subtract the 12,200, and that's going to give us our taxable income before QBI. QBID. So if we check out my QBID calculator, you can see taxable income before QBID, the 145,942 minus 12,200. This gives us 133,742. And so we can say, yes, we're a specified service trade or business. We're single, so this amount is correct. And so we are below the phase out. So we answered that question correctly. Now, the next thing we need to look at is, what is that QBI amount? How do we check that QBI amount? Well, if we go after the Form 1040, here's Schedule 1. This is where we can see our business income coming from Schedule C, 168,438. So my calculator, we're going to back into our QBI, and I've entered that here. Schedule C, net business income, 168,438. But we also need to check for those deductions related to self-employment. So here we can see on line 14, deduct part of self-employment tax, 10,496. We can see line 15 is self-employed SEP simple and qualified plans. That's if you contribute to a business retirement plan for self-employed small businesses. And line 16 is the health insurance deduction, which, so we only have the two in this example. So if we check out my qualified business income calculator, we can see here it is, 168,438 minus 12 minus the 10,496 gives us 145,942, which is the exact amount the software had as well for our qualified business income. Now we can see down here, my calculator is calculating, since we're below the phase out, 20% of QBI based on QBI income, so that's 20% of this, and then we have 20% of the taxable income. Our taxable income is less than our QBI income, so our QBI deduction is limited to that amount, 26,748. So let's go check this out on Form 8995. Here we are on the Qualified Business Income Deduction, Form 8995. This is the simplified version because we're not over the threshold. So everything that qualifies is listed. I just had the one business. If I also had a rental property, that would be listed below. If I had Schedule K1 net income that qualified, that would be listed. And the total of all of the amounts from these activities is reported on line 2. Remember I said if you have a loss in the business, it's going to offset your income. That would be reported here on line 3. We didn't have any for this example. And on line 5, we're going to go ahead and take 20% of our QBI income. So that's 29,188. The next few lines are for those real estate investments I mentioned, so we don't have those in this example. And that brings us down to the limitation. So next we're going to look at what is taxable income here on line 11. Because we're taking that taxable income from the tax return Form 1040, it would include net capital gain. So we would also enter any net capital gain here because we're going to reduce that amount by any gain. Capital gain would be for the sale of stocks or any property held for investment for more than a year. This case we had none. So 20% of our taxable income is going to be the lesser, and therefore the amount on line 15, and also enter this amount on the applicable line of your return. So of course that's being entered here on line 10 for 2019. So now I've changed the numbers for the business so that we are in the phase out of the deduction range because we're an SSTB. So now we need to go back into that section in FreeTaxUSA and change what our taxable income is because we're above the threshold. So in this case, we'll use my calculator to figure out how much it is. You can see we're on the 1040 page 1, and now we have net business income of $208,438. And before our QBI and itemized or standard deduction right here, we have adjusted gross income of $185,407. So here on the calculator, I updated our taxable income before QBID. We're still single, we're still an SSTB, and so you can see now we're at $173,207, which is nearly $10,000 above the threshold of $163,300, which the deduction is phased out over these numbers here that are light. $50,000 for this filing status, which is $213,300. So now we're going to go through the phase out amount. So we'll go back into the Schedule C, edit the business, come down to our qualified business income deduction, click edit, Save and continue. And this is where we need to say, after you finish entering all of your income, will your taxable income be more than $160,700? We need to change this to yes. We need to answer, is this a specified service, trade, or business? Yes. Most cases, we won't have wages for QBI or unadjusted basis. These are required for people above the phase out. So our QBI amount is the same thing as before. It's just a greater amount now. We have net income from Schedule C, which increased a bit. So now it's 208,438. And then our health insurance didn't change, still $12,000, but our 1/2 of self-employment taxes went up a little bit because, of course, our net business income went up. You can see that net income right here on the Schedule C. And now let's take a look at the far funner form, which is 8995A. So we still only have one trade or business under Part 1, but jumping in here with line 2 and Part 2, things get complicated quickly because, again, we're in that phase out. So although this says qualified business income from the trade or business, and we would expect that number to be qualified business income, 185,407. But if you take a look here, that's not that number. That's 139,029. Why is it less? Well, this number, you can see instructions. It's actually coming from Schedule A. So we'll go past the 2 pages of the long form 8995 and we'll get down to Schedule A. So we're calculating that amount for line 2 right here on Schedule A. And you can see if we come down here, we basically have a phase out because we're over that threshold. Remember, we said the phase out is over 50,000. We can see this happening right here. And basically, we're going to aggregate our totals if we have multiple qualified business income and aggregate this calculation. So we start with taxable income, 173,207. That's our taxable income, 173,207. And then this is the limitation amount, 160,700. We're going to subtract that. So we're $12,507 over the threshold, and we're going to divide that amount by the $50,000 phase out. So what percentage are we into the phase out? We're 25% in. And so if we minus that, the percent that we're going to get is 74.986%. So we times 74 times the 185,407, and that's how we got down to this 139.29. And you can see if we come down on my QBID calculator here to in the phase out section, we have that calculating here as well, the 25%, which brings us down to 139.29. And this is going to reduce the amount of our 20% deduction. Now it's at 27,806 instead of being based on our bigger number of 185. So that's all that happens on Schedule A, and then we'll bring that amount up here to line 2. 20%, here's that 27,806 number. We don't have wages or the amount of property, so we left those blank. Otherwise, these tests would be factored in. And then this brings us to another weird thing, which is the phase-in reduction. You can see line 12 here says enter the amount from line 26, if any. So if we skim down to part 3, this is where line 26 falls. And now we're going to start with our tentative QBID, the 27,000 that we just calculated off of this amount. And we're going to subtract line 10. So if either of the wage and property tests had applied, then they would have reduced our QBID amount. And that would be the amount here. But we had 0, so we stuck with the same amount, 27,806. Now, this little calculation here on the left is the same thing we just did to get to the 25%, and there it is. So we're taking 25% of this amount and actually reducing the QBID deduction by that amount. It's really bizarre that we use that percentage to reduce the base QBI for the deduction, and then to also reduce the QBI deduction itself. Again, really bizarre. Talk about a complicated calculation. And then this last section here, all we're doing is comparing the 20% that we just calculated up here, 20,851, to the limitation, which you can see here on line 35, 173,207. That number was our taxable income number, and we're limited by 20% of taxable income, which is this 34,641. But that doesn't limit us because it's much bigger than 20,851. And so that's the amount that we get in this situation. And we'll see that on our 1040 line 10, 20,851. So it is a more convoluted calculation on form 8995-A when you're applying the limitation for people who are above the taxable income threshold for the QBID deduction. That is all. I hope you find this video helpful. Post any questions you have in the comments below. I'd love to hear from you. If you're new here, consider subscribing or sharing this video with someone you know who needs it. Give it a like so that YouTube knows if you do like it. And don't forget to check out the description below for links to my free templates, paid templates, courses, and much more. And I'll see you in the next video. Bye!